Welcome to TCN's Emerging ASX Gems presentation for Paws. Thanks for joining us today. My name is Justus. I'm the co-founder and CEO of Paws, and I will tell you a little bit about Paws and our plans for the future. So let's get right into it. Just a quick overview of what everyone here at Paws is working towards. We exist to enable pets to live their life to the fullest, and it is our goal to become the most trusted and convenient brand to rely on for all pet-related needs. And as you can see on this slide, Paws is well on its way. We're already providing products and services for pet owners in a lot of different verticals, and our focus is on delivering best-in-class products and services. Paws is Australia's dominant pet services marketplace, where we've built a community of over 35,000 trusted local pet sitters who provide 5-star pet sitting, walking, daycare and grooming services to pet owners in their communities around the country. And you can see Paws here on the left-hand bottom. We also offer the #1 rated pet food offering to customers in Australia. With Dinner Bowl, we're running the leading toy subscription service with Waggly, as well as having the leading online pet pharmacy with Pet Chemist. So why are we so excited about the strategy? We see a huge opportunity to become the leading destination for customers to get educated about being a better pet owner and incentivizing customers to stay within the Paws ecosystem of products and services, which ultimately will allow us to be more successful than standalone players. And how do we get there? We're laser focused on building network effects by focusing on providing as many touch points with Paws for owners as possible. This is also the reason why we're focusing so heavily on our data layer, learning as much as possible about our customers with every interaction we have with them, using that information to tailor better products and services for them. And we've seen huge success with this strategy already, improving our repeat rates and cohorts for the marketplace year after year. And we're using the same focus on data we're collecting on our customers. And we have signed up over 30,000 customers already just in the last quarter to drive our cross-sell strategy between different verticals, again, helping us to increase our repeat rates, drive the share of wallet, and at the same time, reduce customer acquisition cost for the whole group. So I've told you a little bit about what we're doing. Now I'm going to tell you a little bit about how we're making money in the group. I've been talking about the different verticals, but you can easily look at our business in 2 segments. One is the marketplace, and the other one are our subscription and e-commerce offerings. And you can see the marketplace here on the left-hand side. We call it Paws Care, with our pet sitting, daycare, dog walking, house visiting visits services, where we also provide subscription services on a weekly basis. So you can book a dog walker, for example, to come on a Wednesday and Friday, lock it in every week. And the service will be provided automatically, you'll be charged automatically. So it makes the whole experience extremely easy. On the marketplace, we take 20% commission from our pet sitters and a 9% booking fee from the pet owners. After GST, this turns out to be very close to 25% effective take rate. And the marketplace currently is the biggest part of our business. And it's a very attractive business. We've got a very fixed cost base now, and the business has been scaling very consistently over the last couple of years, achieving very close to 75 to 80% growth rate year on year, and we expect to see the same going forward. On the other hand, on the right-hand side, you can see our subscription and e-commerce segment, which is an online-focused offering where we're targeting margins in the range of 25 to 40%. With the different businesses achieving different results. So Dinner Bowl is more on the lower end of a margin perspective, but a very attractive business in terms of the cohorts. We're retaining customers for a very long period of time, and they stay with us on the subscription, on the food subscription, for a very long time. And we've got other businesses like Pet Chemist, which is a very attractive business at the moment. Being in the health space, people are much more concerned about the health of their pets these days. They're spending a lot more on making sure that their pets are not just being fed, but being fed well, that they're also getting the right supplements that they need to live longer. And Pet Chemist is right in the sweet spot to provide products in that area. And then Waggly is also a very interesting business for us. We've really worked that business also out over the last year and a half since we've acquired that business, where we're now achieving record subscription numbers at record low customer acquisition costs. So this is really a result of us of driving those networks effects that I've talked about, and the cross-sell between the different businesses that we have to achieve record results. And Waggly, for example, is on the very top end of that margin range that you see on the bottom, achieving nearly 40% gross margin for a delivered box to our customers. So very, very attractive business for us, and we see a lot of scale in that business going forward. And you can see the results of all the hard work, I guess, over the last couple of years. On the right-hand side there, we've now really achieved a significant scale for the business, achieving a operating revenue run rate in September of $23 million. So, you know, shows you the scale of the business, and we've achieved 85% year-on-year growth on that number. Revenue for the last quarter actual was 5.4 million, which is 300% up, which is a reflection of the pet chemist business, which we acquired towards the end of last financial year. And then one achievement that we're very proud of, and has been a focus for us over the last couple of months in particular, is obviously profitability and reaching profitability. So our marketplace is now profitable for the second quarter in a row. We've achieved a operating EBITDA as a percentage of revenue of 20%, which was up 11% just from last quarter. And we see that improving even further. Like I said before, the marketplace, very stable cost base, and we've got a very efficient way to acquire customers now. And we see that business contributing to our EBITDA margin significantly over the next coming quarters. And for the rest of the business, we've very much focused on profitability for all the other segments of the business as well. And we're looking to achieve profitability for the whole group towards the end of this financial year. And another thing worthwhile mentioning is probably some of the iconic partners that we attracted along the way. One of them you can see on the bottom here is Qantas, who we have an agreement with as their exclusive pet services partner, which not just helps us from a customer acquisition point of view, but obviously also from a building trust perspective, which was a huge win for us over the last couple of years. So where to from here? I'm sure I'm not telling you anything new when I say that the relationship we have with our pets has significantly changed. Pets are now part of the family, and that is reflected in the pet industry's growth numbers over the last couple of years, with the pet industry now representing a $30 billion market opportunity in Australia alone. We do not only have more pets in Australia, pet ownership is up 25% since the pandemic, but we also see that pet owners are spending more on their pets, and they are much more concerned about the quality of products they are buying for their pets. And this is really what we've seen playing out over the last couple of years, having that double whammy of more customers, but also the customers spending more on the products and services that we are providing. Another huge shift we've seen over the last couple of years has obviously been COVID, and the acceleration and the shift that we've seen from offline to online, which helps us as a very kind of online focused business, and has contributed to the growth that we've seen over the last couple of quarters. Another thing that we've seen playing out is the pent-up demand for travel. I'm sure you feel the same as me. When I was very happy to be able to actually jump on a plane again and leave the country from time to time. And we've seen that for, you know, most Australians out there as well. Our marketplace has seen significant growth over that period of time. And we're kind of coming into the golden quarter for Paws marketplace, but also for our other segments, with the Christmas holidays around the corner. And that's not also been playing out for our marketplace, but also for our recurring revenue businesses in Petchemist, Dinnerball, and Waggly, with customers being much more accepting for subscription services, which plays perfectly into the strategy that we have. And last but not least, we've got a strong balance sheet with $3.5 million in cash in the bank. We're going into the strongest quarter traditionally for us as a business, where we're seeing actually getting close to cash flow break even from a cash flow perspective. So we're very well positioned to execute on our strategy going forward, and are very excited for the next couple of quarters for the business, and we'd love to for you to join us on that journey. And with that, I'll wish you a very nice rest of the day.